There is a form the IRS published in 2006, updated it quietly in 2014, revised the instructions again in 2023, and then changed the filing threshold one more time for tax year 2025 returns filed in 2026. It is called Form 888O, the credit for qualified retirement savings contributions, and it can put up to $2,000 directly back into the pocket of a married couple filing jointly who earns under a specific income ceiling. The IRS has never once included a mention of this form in the standard CP or automated letters it sends to seniors who file on a fixed income. It has never appeared on the front page of the 104O instruction booklet. The free file fillable form system on the IRS website does not prompt you to consider it. If you prepared your own return or used a basic tax preparer at a strip mall office, you almost certainly never saw it. And that is not an accident. By the end of what I am about to tell you, you will know exactly what Form 8880 is, how the Savers Credit works in tax year 2025 returns being filed right now in 2026, what the adjusted gross income limits are, how it interacts with your Social Security benefit, and exactly what to do in the next 14 days if you already filed without it. My name is David Chen. I spent 27 years as a senior field agent for the Internal Revenue Service. I am retired now. I do not sell financial products. I do not manage money. What I do is name the things I watched get buried for almost 3 decades, and I hand you the shovel. Today, I am going to walk you through one of the most underused tax credits in the entire code, one that was specifically designed with lower-income Americans in mind, and that the filing infrastructure around it was built in a way that ensures most of those Americans will never claim it. This is not speculation. The Government Accountability Office published a report years ago estimating that billions in Savers Credit dollars go unclaimed every filing season. The Treasury Inspector General for Tax Administration flagged the same problem. Nothing changed. The form still sits in the same obscure corner of the IRS catalog, and the people it was designed for still walk right past it. Let me explain exactly what this credit is and why it was engineered to be invisible. The Savers Credit, formerly known as the Retirement Saving Contributions Credit, was established under the Economic Growth and Tax Relief Reconciliation Act of 2001. It was made permanent by the Pension Protection Act of 2006. It provides a non-refundable tax credit of up to 50% of voluntary contributions you make to a qualifying retirement account. That includes a traditional IRA, a Roth IRA, a 401k, a 403b, a 457 plan, a simple IRA, or a SEPIRA. For tax year 2025, which is what you are filing right now in early 2026, the maximum contribution that qualifies for the credit is $2,000 per individual. That means a married couple filing jointly could claim a credit on up to $4,000 in contributions, and at the 50% rate, that credit could be worth $2,000. Not a deduction, a credit, a dollar-for-dollar reduction in what you owe. Now here is where the hiding starts. The credit rate is tiered based on your adjusted gross income and your filing status. For tax year 2025, if you are married filing jointly and your AGI is $46,000 or less, you may qualify. If you are a head of household, the ceiling is $34,500. If you are single or married filing separately, it is $23,000. These numbers were adjusted for inflation from the prior year. The IRS publishes them in Notice 2024-80, which announced the inflation adjustments for tax year 2025. That notice is publicly available, but it is a dense document full of numbers that apply to dozens of provisions, and the Savers Credit thresholds sit in a table buried deep inside it, with no explanation of what they mean for someone living on Social Security and a small pension. Think about this the way you would think about a store that puts the clearance rack behind the loading dock. The items are technically for sale. The price tags are technically visible, but no one who walks through the front door will ever find them unless someone tells them to walk around the building. The IRS equivalent of walking around the building is knowing to pull up Form 8880, fill it out, and attach it to your 1040. The form is 2 pages long. It asks 6 questions. It requires you to report what you contributed. Calculate your AGI-based credit rate from a simple table printed on the form itself and multiply. A person with a 7th grade math education can fill it out in less than 10 minutes. And yet the IRS's own Volunteer Income Tax Assistance Program, the VITA program, has historically undertrained its seasonal volunteers on this credit. I saw it firsthand. The training materials for VITA sites emphasize speed and throughput. A volunteer processing returns for elderly filers on fixed incomes may not think to ask whether the taxpayer contributed anything to an IRA during the year, especially when the taxpayer does not realize the question matters. Here is the national scale of this problem. The IRS Statistics of Income Division publishes data on how many Form 8880 filings are received each year. In recent years, the number has hovered around 7 to 9 million returns claiming the credit, out of tens of millions of taxpayers who would have been income eligible if they had made even a small qualifying contribution. The credit is non-refundable, which means it can only reduce your tax liability to zero, not generate a refund beyond that. But for a senior who owes even a few $100s in federal tax, this credit can wipe that liability out entirely. And if you're someone who contributed to a Roth IRA thinking it was just a saving strategy, you may have also earned a credit you never claimed. Let me tell you about 3 people who discovered this the hard way. The first is a woman I will call Margaret, 71 years old, living in Dayton, Ohio. Margaret collects Social Security of about $1,900 a month, which is close to the national average retirement benefit of roughly $1,976 as of January 2026, after the 2.5% cost of living adjustment took effect. She also receives a small pension of $400 a month from a school district where she worked as a cafeteria manager. Her total annual income is about $27,600. Margaret has a Roth IRA. Every year, her daughter helps her put $500 into it from her savings. Margaret has been doing this for 9 years. She has never once claimed the saver's credit. At her income level filing as single, she would have qualified for a credit rate of 10%, possibly 20% depending on the exact year and her exact AGI. That is $50 to $100 per year she left on the table, year after year. Over 9 years, that is somewhere between $450 and $900 that the government owed her and never told her about. Margaret's tax preparer used a basic software package and never asked whether she contributed to a retirement account. The software did not prompt the question because Margaret's return was simple, and the intake form the preparer used did not include a line about IRA contributions. The second person is a man named Gerald, 63, living in Tucson, Arizona. Gerald is not yet retired. He works part-time at a hardware store, earning about $14,000 a year. He has a 401k from a previous employer that he rolls small amounts into a traditional IRA each year. His wife Sandra collects SSDI of $1,400 a month. Their combined AGI on a joint return is approximately $31,000. Gerald and Sandra fall squarely within the 50% credit rate bracket for married filing jointly. If Gerald contributed even $2,000 to his IRA, their credit would be $1,000. They have filed jointly for the past 4 years and never once attached Form 8880. Gerald told me he had never heard of the Saver's Credit. Not from the IRS, not from AARP, not from the Social Security Administration, not from his bank, not from the brokerage that holds his IRA. $1,000 a year for 4 years is $4,000. That is more than 3 months of Sandra's disability check. The third person is a woman named Doris, 67, in rural North Carolina. Doris lives alone. She takes the standard deduction. She receives Social Security of $1,600 a month and has no other income. Her AGI, after accounting for the taxable portion of her Social Security benefit, comes in under $23,000. Doris has a simple IRA from a small business she used to work for. and she contributes $300 a year into it from a savings account her late husband left her. That $300 at a 50% credit rate would have generated a $150 credit. Small, yes, but Doris owed $182 in federal tax last year. The credit would have cut her liability to $32. She paid the full $182 because no one told her the credit existed. Now I want you to ask yourself one specific question. Did you or your spouse contribute any amount, even $100, to an IRA, a Roth IRA, a 401k, a 403b, or any other qualifying retirement account during 2025? And if the answer is yes, did you file Form 8880 with your tax year 2025 return? If you're not sure, pull out your return. Look for the form. It would be attached as a separate schedule. If it is not there, you may have left money on the table. Here is what was buried, and exactly where it was buried. The saver's credit is described in Internal Revenue Code, Section 25B. The IRS discusses it in Publication 590-A, which covers contributions to individual retirement arrangements. It also appears briefly in the instructions for Form 1040, but only as a line reference. On the 1040 itself, the credit flows through Schedule 3, Part 1, Line 4. If you are reading the 1040 instructions, you will find a mention of the credit on the page that covers Schedule 3. But there is no explanatory paragraph. It simply says, Retirement Savings Contributions, Credit. Attach Form 8880. That is it. No description of who qualifies, no income thresholds, no indication that this might apply to someone living on Social Security. You would have to already know what Form 8880 is, go find it separately, read its instructions, and decide to fill it out. The instructions for Form 8880 itself are published as a separate document. They are clear once you find them. The table on the form shows your credit rate based on your AGI and filing status. For tax year 2025 returns, the 50% rate applies to married filing, jointly filers with AGI of $23,000 or less. The 20% rate applies from $23,001 to $25,000, and the 10% rate applies from $25,001 to $46,000. For single filers, the 50% rate applies to AGI of $11,500 or less, the 20% rate from $11,501 to $12,500, and the 10% rate from $12,501 to $23,000. The Social Security Administration's website does not mention Form 8880 anywhere. I searched it again this month. Medicare's website does not mention it. The AARP Tax Aid Program, to its credit, does train volunteers on this form, but coverage varies by site and by the individual volunteer's familiarity with the credit. The IRS's own free file program, which partners with commercial software companies to offer free filing to lower income taxpayers, does include Form 8880 in some of its partner products, but only if the taxpayer enters information about retirement contributions during the intake process. If you skip that section or answer no because you do not think of your small IRA deposit as a retirement contribution, the software moves on and never circles back. This is the architecture of invisibility. The rule is public. The form is available. The instructions are accurate. And the system that delivers tax preparation to the people who need this credit the most is designed in a way that makes claiming it dependent on the taxpayer already knowing it exists. Now, here is what you do with this information if you are filing your 2025 return right now. Go to irs.gov and search for Form 8880. Download the form and the instructions. Look at the AGI table. If your adjusted gross income falls below the threshold for your filing status, and if you made any qualifying contribution to a retirement account during 2025, fill out the form. It takes less than 10 minutes. Attach it to your 1040. The credit flows through Schedule 3 to your 1040. If you are using tax software, go back into your return before you file and look for a section about retirement savings contributions or the saver's credit. It may be listed under credits, not under deductions. If you already filed your 2025 return and you did not include Form 888, you can amend your return using Form 1040-X, the amended U.S. individual income tax return. You generally have 3 years from the original filing date to file an amended return. That means if you filed your 2025 return in February of 2026, you have until approximately February 2029 to amend. But do not wait. The IRS is currently processing amended returns with significant delays. As of March 2026, the IRS is reporting processing times for paper-filed 1040-X returns of up to 20 weeks or longer. If you can file your amended return electronically, do so. The IRS began accepting electronically filed 1040-X returns several years ago, and most major tax software now supports this feature. Check the current status of electronic 1040-X filing at irs.gov if you are unsure whether your software supports it. And here is something most people do not realize. You can also go back and amend prior year returns. If you made qualifying contributions in 2024, 2023, or 2022 and never claimed the credit, you may still be within the 3-year amendment window for those years. Pull out your old returns. Check your AGI for each year against the thresholds that were in effect for that tax year. The thresholds change slightly each year due to inflation adjustments, so verify the numbers for each specific year using the Form 888 instructions for that year, which are archived on irs.gov. Let me tell you what this is really about. The tax code contains hundreds of provisions. Some of them benefit corporations, some benefit high-income investors, some benefit real estate developers, and a small number of them were written specifically for people like you, people earning modest incomes, people trying to save even a little bit for retirement, or to keep a small cushion against emergencies. The saver's credit is one of those provisions. It was designed to reward you for saving. And the system that should be delivering that reward to you has instead made it your responsibility to find it, understand it, and claim it without any meaningful outreach, without any flag on your return, without any notice in the mail saying you might be eligible. That is not a conspiracy. That is a design choice. And it has cost people like Margaret and Gerald and Doris real money, real dollars they earned and were entitled to and never received, because no one told them to walk around the building and look at the clearance rack. One more thing, if you are 60 years of age or older, you should be aware that under the Secure 2.0 Act passed in late 2022, there is a provision that was scheduled to create an enhanced catch-up contribution limit for retirement accounts starting in 2025. For individuals aged 60 through 63, the catch-up contribution limit for 401k plans increased to the greater of $10,000 or 150% of the regular catch-up limit, indexed for inflation. If you are in that age window and you made a larger catch-up contribution to your workplace retirement plan during 2025, a larger portion of that contribution may qualify for the saver's credit, depending on your AGI. This is another detail that most tax preparers will not flag unless they are specifically looking for it. I am not telling you this because I want to alarm you. I am telling you because I spent 27 years inside the machinery, and I know what it looks like when a provision is technically available, but functionally unreachable. The IRS does not go out of its way to hide things. It simply does not go out of its way to show them to you. And when you're living on $1,900 a month, and you owe $180 in taxes that you did not need to owe, the difference between hidden and hard to find is meaningless. Go to irs.gov. Search Form 888. Download it. Read the one-page instructions. Check your AGI. If you qualify, claim what is yours. If you already filed, file the 1040-X. If you need help, call the IRS at 1-800-829-1040, but be prepared for long hold times given the current staffing situation. You can also visit a local taxpayer assistance center in person. You can find the nearest one on the IRS website. Bring your prior year return. your social security statement, and any records of retirement account contributions. This is David Chen. The form was always there. They just made sure you would never look for it.